Hey, welcome back to my screen. My name is Bestman Depreke Makri. If you're joining us for the first time, you're welcome to Traders Advocate. And if you're an existing subscribers, kudos to you for keep coming back, watching our videos, and I hope your trading career and journey has actually changed for the better. I know for a fact it had changed for the better because the same principle I come out here to put out on daily basis as what has helped me become the profitable forex trader that I've been for quite a long while now. For all of you joining us for the first time, this is Traders Advocate, a channel built for struggling traders. So if you're a struggling trader, this is home for you. This is where we help fix your trading paralysis. I'm not telling you abandon your strategy, okay? I'm here to help you identify your mistake, but more so help you fix your mistake. Most of you, you've blown accounts several times over the years, and you feel like trading is not for you. You've tried different kind of indicators, moving averages, signal providers, copy trading. It didn't work for you. Rather, you keep losing money. All of those nonsense is not the best way to actually have an edge in the game. You need to have the skill set. And this is what the channel does. It helps you, give you the skill set, not tell you hypothetical stuff, not tell you best 1 hour strategy, best 5 hour strategy, and show you hypothetical stuff, how I turn $5 to $1 million, and show you replay mode. Not of all those nonsense will help you. I'm not a content creator. I'm the one of the most realistic forex trader here on YouTube. So best believe the trades that I call out here, I'm equally taking them. I analyze the market before the market play out. This way, you guys get to see the mindset of a profitable forex trader. And today's episode is no different from the goal of the channel, which is to help you struggling trader become a profitable forex trader. If you hear what you're liking, you're interested, you know what to do to be a part of this family. Click the subscribe button, the bell notification, so you don't miss out on our subsequent video. All right, so you will not be seeing any fancy stuff on my screen, no gimmicks, no bullshit. Just me and the chart. And you best believe this is my personal account. I trade my personal account as well as also manage funds for other people as well. Yeah, so when I call out trade here, best believe I'm also taking the trade. All right, let's jump into this pair, guys. I'm hyped. Let's jump into this pair. Let's see how we can identify trade opportunity, and let's see how we can put money for let's see how we can put money in our pocket. All right, so this is the euro USD chart in front of us. I'll be doing a top-down analysis so you get to understand my thought process, how I break this market down, and what I'm looking at. All right, so this is the Euro USD chart. You can see the market is bearish. It is bearish because it checks all the characteristic of a downtrend. This is a high, this is a low, this is a lower high, this is a lower low, this is a lower high, this is a new lower low. The market has put in a new lower high. Now looks like we want to crash all the way to the downside. So I'm going to draw my key levels. If you don't know how to draw key levels, please let me know on the comment section, guys. If you don't know how to draw key levels, comment on the comment section. Tell me your issues. I will make a video on how to draw your key levels so you don't get confused. Pardon me, I don't like this color. All right, this is the color I'm looking for. All right, cool. So I'm marking my key levels out. You can see price. Don't worry, I'm going to explain all of this. Don't worry, guys, I'm going to explain all of this. All right, so you can see this was the high. We came down here. We had struggles around here. For every time price comes here, we reject. Come here, we reject. Come here, we reject. So this is a level, right? This is the level that you want to take seriously because why prices have interactions with this level. And look at how we broke below it. We came back here, struggled around this level. Also came back here, also struggled before actually popping to the downside. So this is the most recent low, right? So this is the recent lower low. This low is lower than this, so hence the reason I marked this one out. So we've popped above here. So from what I can see is we've broken above here. We've come back to do a retest of here. We are currently pointing up. So this is an immediate trend within a major trend which is bearish. I think that again, this is an immediate bullish trend within a major trend which is bearish. You have to understand the major trend is bearish. It is bearish because it checks all the characteristics of a downtrend. In a downtrend, price should be creating lower lows and lower highs while maintaining the high. So this is a low, this is a high, this is a low, this is a lower high, this is a lower low, this is a lower high. This is the most recent lower low. But notwithstanding, we also have a low, a high, a higher low, a new higher high. So this has also the characteristic of an option. But this guy is an immediate trend within a major trend. So what that means, even in bigger trends, you have smaller trends known as pullbacks or immediate trend. Alright. Like I said earlier on, the principle of price action state in a downtrend, price should be creating lower lows and lower highs. Why maintaining the high? So this until this high here is broken, whatever is happening here is an immediate trend within a major trend, because principle of action state until the high is broken, the time frame is still bearish, the trend is still bearish, right? So this is an immediate bullish trend within a major trend which is bearish. Now I know we've broken above this trend line. The major trend line has been violated. The major trend line being this one has been violated, right? We've broken above the major trend line. Okay, so this was the major trend line holding the market down. We've broken above it and we are currently pointing up. Now a break of a trend line is not a change in market structure. Trend lines are not market structure. Trend lines are technical tools. They mark out potential areas of price reversal. They are not market structure. Principle of price action state in a downtrend, price should be creating lower lows and lower highs while maintaining the highs, not while maintaining a trend line. So price can break above a trend line or break below a trend line and start going against a major trend. What does that mean? It means that that would be an immediate trend moving against a major trend. Notice how we broke above the trend line here. We did a retest of it, but we came and hit a major level and reversed all the way to the downside. Would you have said this was a change in market structure? Of course, you would have said no. Price hit a level, and what happened? We started reversing all the way to the downside. So get this straight: trend lines are technical tools, not market structure. Now, notwithstanding, so this immediate trend has run into a major area. This level most of them didn't see. If you look left, you see we had interactions with this area before. We had several years. The market struggled around there for 2 years. So from 2024 down to 2016, the market was struggling to break free from here. We tried, we came back, we tried again, we came back, we popped above it. We retested, we pushed all the way to the upside. Now we're coming down, we kissed it, came back then, retested here, pushed up, came back here, came down, and we are currently on around this area. So it's just telling me this immediate trend is having issues continuing with the major trend. It wants to reverse to continue with the major trend. So this immediate trend has run into a major area of resistance, and it wants to reverse to continue with the major trend, which is bearish. So how do we know when an immediate trend wants to reverse to continue with a major trend? It will always run into key areas of the major trend, i.e. support and resistance for a trend line. And best believe once you see reversal sharp pattern like double top, head and shoulder pattern, inverse head and shoulder, double bottom, that immediate trend is likely going to reverse to continue with the major trend. So I'm trying to build a case as to why this immediate trend wants to reverse to continue with a major trend which is bearish. Cool. Now you can actually see, if I zoom in properly, you would notice this is a left shoulder, this is a head, this is a right shoulder. Head and shoulder pattern are bearish reversal sharp, and they can reverse a trend from being bullish to being bearish. So head and shoulder pattern is saying, look, this immediate trend wants to reverse to continue with the major trend which is bearish. Now looking at this properly, I can tell for a fact a lot of you traders are blown accounts. A lot of you traders have blown account not once, not twice for the year. Why? Because you were trying to trade and it wasn't happening. It was market wasn't giving, right? If most of you even found it very difficult to draw your levels inside of this area because you're a lower time frame trader, probably you're an intraday trader or a scalper, you do your analysis from the 1 hour time frame or from the 4 hours time frame or daily time frame. All you could see is this guy. So let's go to the daily time. This is all you can see. This is all you can see from the daily time frame. Hence the reason you're trying to buy, you bought somewhere around here, you sold somewhere around, and the market wants to reverse all the way to the downside. What happened? The market pop up, your stop loss got smashed. The market came back again, it's coming down. It wants to sell again, pops up again. It's now going up, it's now going up. It has broken out of the range. You bought somewhere around here, stop loss became your case. There's been several blown account here, several failed profit challenges here. Why? Because inside of a range, the market tends to act irrational. The market tends to act mad, right? And traders find it very difficult to trade when the market is in a range, as opposed to when the market is trading. Because when the market is trading, it's easy for traders to make money, right? Most of you just came out from Forex Academy, or you just came out from where you start learning Forex, right? And you jump in and you want to trade yourself. This is what you came and met. Let's now defeat what they taught you, what your brokerage firm taught you, or what your mentor taught you, because you find it very difficult to draw your levels, right? And hence the reason you keep forcing trade is not happening. You keep forcing trade is not happening. Or today you're in profit, tomorrow you're in loss, today you're in profit, tomorrow you're in loss. At the end of the day, plus or minus, you've made next to nothing. Forget all these guys on Instagram, on TikTok, on YouTube acting like they know where all the supply and demand area are. Trust me, they are blowing accounts. All right, so doing your analysis from a monthly time frame, you get to see the overall picture. So once I saw price coming here having issues around this, I just sat on my hands and allowed the market to decide. And in all truth, the market was just building a case as to why it wants to reverse all the way to the downside. And it's giving us a reversal sharp pattern known as the head and shoulder pattern. So the left shoulder, head, right shoulder. We've finally broken below the neckline. We've broken below the neckline. It now looks like, look, we want to roll over to the downside. So we should be looking for a selling position to the downside. Why? Because the market has run into a major area of resistance. We form an head and shoulder pattern telling us this immediate bullish trend, this pullback will reverse to continue with the major trend, which is bearish. And also, if I draw my trend line from the two recent high, you will realize this is also a touch of the trend line, right? Principle of price action states the third touch of a trend line does the reversal. So we have multiple price actions giving us reason as to why we should be looking for sell. This is the first touch, this is the second touch, and this is the third touch of the trend line. So first one, second one, third one came in confluence with the trend line, and we've had a reversal sharp pattern known as the double top. Telling us, look, a reversal to the downside is very imminent. It wants to occur. We should start looking for selling position to the downside. Cool. Now we're done with the monthly time frame. Let's go to the weekly time frame. On the weekly time frame, you can actually see the head and shoulder pattern very clearly. This is the left shoulder. This is the head. This was the right shoulder, and we've broken below the neckline. Pardon me. Let me adjust this properly to accommodate for the touches of these candles, right? You can see touch here, touch here, touch here. Let me get this properly. It's very important you get your levels properly so you don't jump in prematurely. All right, so okay, see we have touch here, touch here, touch here. We finally broken below the neckline. You're currently pointing down. So what will be the rule of engagement at this point? We are only looking for selling position to the downside. We are not buying, guys. We are selling. We are looking for selling position to the downside. So the rule of engagement is wait for a proper breakout which has already occurred. Wait for price to break below here. So I'm waiting for a proper breakout which has occurred. Pardon me, let me get this to explain this properly. So a proper breakout which has already occurred. I need price to then pull back into this level for a retest. We don't sell at the breakout. Never sell at the breakout, guys. If you do so, you may likely be prone to market you will be prone to market manipulations. Never sell at the breakout. Never. All right. So wait for the proper breakout, which has already occurred. Wait for price to pull back for a retest of the neckline of this head and shoulder pattern. So this now becomes support, resistance. Sorry to say. Once we break out, we pull back here for a retest of here. I'll be going to the 4 hours time frame to refine my level. On the 4 hours time frame is where I'll be coming to refine my level. So I would love to see a breakout, a retest of here. Once we bounce somewhere around there, I'll be looking for a bearish candlestick formation to occur, i.e., bearish engulfing, shooting star, evening star, you name it, a bounce from this area. And again, guys, please don't sell at resistance, and equally don't buy at support. If you buy at sell at support and resistance, you're also prone to market manipulations. So once we come in here for a retail and we got that bounce, I'll be going to the 4 hours time frame to look for the waves. So something like this. Pardon me, let me use a different chart, a different time frame to explain. So I'll be connecting my trend line something like this, connecting the bottom of the pullback that will occur somewhere around here. So you don't get confused. Let me zoom this properly so we don't get confused. So I'll be joining. So let me take this off. Okay, this is better. So I'll be joining my counter chain line at the retest of here. Then I'll wait for price a 4 hours candle break of my trend line. Why am I doing this? These are the circuit breakers, the parameters that I put in place that help me stay in the confinements of being a profitable forex trader. Because if you sell somewhere around there, the market can actually push a little bit, come here and hit this supply level. So we have this supply level somewhere around there. It's possible the market can come here, hit the supply level, your stop loss gets smashed before actually heading to your initial target. And what happened? You've analyzed the trade, but your stop loss got smashed before market start moving into your initial target. And that's the worst feeling that you can actually have as a trader. Most traders beat themselves when that happens. So rules of engagement is wait for price to pull back into this level. It's possible you can fake out, no problem. But once price comes back and take out my counter chain, so my counter chain line will be drawn like this, connecting the lows. Once I see a 4 hours break of my counter chain line, not a 5 minutes break, not a 1 minute break, a 4 hours break of my counter chain line, I will start selling all the way to the downside. So we have all this space to work with, and this is the 1,000 pips collapse, guys. This is the 1,000 pips collapse. I don't care what kind of account size you have. If you have $100, a $20, a $500, a $1,000 account, this is a good trade for you. You click the sell button once, close your laptop, go and do other things on your life. Spend time with your mom, your girlfriend, watch a TV, read a book, and allow the market to work for you. Stop babysitting your trade, guys. Most of you have good strategy, your entry and exits are spot on, but because you babysit your trades, you take a trade and you babysit the trade, you start interpreting the random candles at random levels. I have done the analysis. Once price commits to my criteria for entry, I'm going to click that sell button. My stop loss is going to come somewhere above here. Now I'll click the sell button. Immediately I'll close my laptop, go and do other things in my life. Every 2 or 3 days, I'll come and look out for the trade. Not every 5 minutes, 1 hour. No, that is what intraday traders and scalpers do. No, it will give you heartache. I'm going to close my laptop, go and do other things in my life, let the market work for me, and we'll have all this space to the. This is 1,000 pips, guys. This is 1,000 pips collapse all the way to the downside. Now obviously when I do my analysis, I always look out for areas that will cause an offset to my trade as to why my trade would not actually play out, or why I may not actually get to my overall target. I will obviously look out for those evil spirits, guys. You have to understand that evil spirits in forex, These guys, you don't want to play with them. Yeah, you don't want to play with them. I will not be carried away until we have 1,000 pips and I just click the sell button and go and sleep. No, I have to look out for areas that might actually want to cause an upside as to why we shouldn't get over our target. And for a fact, this guy is here. This level is here. So I'm going to change this level with my first profit taking level. This will be my actual first profit taking level. You notice the market had, so from 2023 the market was in this level. We had issues. This is the right level. Let me get it to be a little more thicker. Okay, cool. So for 2023, notice the market was struggling around this area. Every time we come here, we reject, we reject, reject, reject. It actually, the market actually consolidated for a year before actually breaking above this area. So best believe if we are coming down here, this guy is likely going to put up a fight. Price can come in here, bounce and start pushing all the way to the upside. And imagine being in a lot of profit from here down here, and price comes here and start rejecting, and all of your profit turns to negative. That's the worst thing that can actually happen to you as a trader. So I'll not be too emotional and get carried away, and say, okay, we are coming down here. No, the market will come here, play around here, play around here, play around here, break, do a retest of here, come down here. So once the market comes, if I see a break of here, a retest of here, I'll be adding more position to my existing trade. And also market can also come here, form a base around here and shoot all the way to the upside. So what will be our bone of contention when the market comes here? When the market comes here, I'm going to close out my first trade entirely as profits. Then I'm on my second position, I'm going to push my stop loss below where I sold from. This is what they call break even. Since we are selling, I'll push my stop loss below, a little pips in profit below where I sold from. Anticipation, my second trade will get to my overall target, which is somewhere around here. Okay, so if you trade a $1,000 account, you can use 0.05, 0.05. So once price comes in here, close out your first 0.05 entirely as profit, then push your second position, your other 0.05, a little bit below where you sold from. So on your first trade, you've taken something from the market, you're not giving it back again. You've put it inside your pockets. You've taken something from the market, you're not giving it back again. All right? Then on your second trade, you've taken a little bit of profit. You've secured a little bit of profit. You've not closed it to. You've secured a little bit of profit in anticipation that your second trade will get to your overall target, which is here. Now, this helped me. These are the parameters that I also put in place. The circuit breakers I put in place that help me manage my risk. I difference between trade management and risk management. I keep saying this on the more serious notes. I'll make a video on that, but this channel hasn't gotten to that level where this kind of videos will be made. Now, if we get to 1,000 subscribers, I'll start dropping videos like that. But for now, we're just playing around 20 subscribers thereabouts. So I'm just a little bit giving you guys a feel of what it feels to be a profitable forex trader. Okay. So once the channel keep going, I'll be dropping some amazing episodes that will help you become the that you always wanted to be, which is being a profitable forex trader. So once you come in here, first position will be closed. I'll be pushing my stop loss past break even in anticipation. We are getting all the way down here, and also let me show you a little bit of trick. That is a principle in forex that goes like this: the amount of pips we did while we are stuck in the range. So we are trading between this high and this low. Come here, we reject. Come here, reject. Push up, reject. So the amount of pips we did while we are, let me zoom in properly to see this. The amount of pips we did while we are stuck in this range is likely going to be the amount of pips we will do when we break out of the range. If I take this and put it right here, you can actually see this also lines up with this area. So yeah, so you see, I know what I'm talking about. Now, all right, so we are looking for selling position to the downside. Our first target is here. We are not closing our trade entirely as profit. We'll push our, once price comes here, our first position will be closed as profit. Our second position will push our stop loss past break even. Anticipation, we are coming down here. But now, let's get real. Chart patterns, regardless of the time frame they occur, they can be invalidated. I've been doing this for over 10 years. So best believe I've seen various market cycles and formations play out. Sharp pattern, take that again. Regardless of the time frame they occur, are a monthly, weekly, daily, 4 hours, 5 minutes, 1 minute, 30 minutes, they can all be invalidated. Yes, the higher the time frame, the higher the probability of that sharp pattern playing out. But regardless, sharp patterns, regardless of the time frame they'll call, they can be invalidated. Why am I stating this? I don't want you to be carried away and say we must come as the most, we must come down here, we form a head and shoulder pattern, we touch trend line, we must come down here. No. The Forex market is not an exact science. The global financial market is not an exact science. It is moved by social political factor. Things can be good and sweet and rosy today. Tomorrow shit can go left and the market can reverse. Okay? Always have that in mind. 1 plus 1 in Forex will not always be 2. It can be 2 today, tomorrow it can be 11, some day it can be freaking something else. So always have your mindset open, right? So in the scenario price comes and break above here and start seeing some bullish candle play around here, it means the wholesale setup has been violated. We might actually experience a push to the upside. It's also possible we can break down here and push back up a little bit. You can come break down here, maybe come around here a little bit, push all the way to the upside. But the good thing is, regardless of how the market want to play, I will make money. If the market want to crash to the downside, we'll make money. If we want to blow to the upside, we'll make money. As traders, we are reactors. We react to what the market is giving us. We don't fight with the market. We align ourselves with the market. All right. So, but I'm hoping, please, I'm praying, guys, this market should collapse. Because yeah, I want to make all of these pips to the downside. Obviously, I see no reason as to why it shouldn't collapse all the way to the downside. I'm favoring this market to the downside to the tune of 70%. I'm also going to keep 30% in mind that this market can actually blow all the way to the upside. Now, also, I'm also seeing this trend line coming from the bottom. So if you are selling and we take out this trend line, we take out this level, be wary of this trend line. This guy can cause an upside. So 1.0770 can actually be an area you want to have in mind. So I'll be closing watching the euros. So that's it for the euros. Let's look at GBP USD. GBP USD is very similar to that of the euros. If you've been following China very religiously, we've been anticipating a reversal of the Great Britain pound to the downside. The pound sterling, we anticipated the reversal to the downside. All right, so this is an immediate trend that almost came to violate the bearish trend. Let me zoom out properly so you get to understand. This is a high, this is a low, this is a lower high, this is a lower low, this is a lower high, this was in lower low. We had this immediate bullish trend breaking above this resistance, came here, retested it, and started pushing all the way to the upside. If we have broken above this area and broken above this trend line somewhere around here, then we can say this is a full scale reversal. But what happened? We came here and we had issues, right? We have issues breaking above this area, and the market was just being a case as to why it wants to reverse to the downside. This is a first top. Second, the market just gave us a double top. Double top are bearish reversal sharp, and they can reverse a pullback to continue with the major trend. They can reverse an immediate trend from being bullish to being bearish. They can reverse a major trend from being bullish to being bearish. So this double top wants to reverse this immediate trend that is bullish to continue with the major trend that is bearish. And also, if I look at this properly, you'll notice also from head and shoulder pattern. So this is a left shoulder, head, right shoulder. Even though we form a double top, we also form a head and shoulder pattern, left shoulder, head, right shoulder. All the dollar base pair is giving a reversal sharp pattern to the downside. All right, so left shoulder, head, right shoulder. This is the neckline, and this neckline is currently in line with this trend line is currently aligning with this descending trend line coming from the bottom. So this market is just hanging for dear life. Okay, so at this point our mindset should be wire reversal to the downside. If up to now you're watching this video, you have not smashed the subscribe button, the bell notification, please do so you don't miss out on our subsequent video. I want you to be, if you're a struggling trader, I see no reason as to why you shouldn't be a part of this family. All right, I want to help struggling traders become a profitable forex trader. That is the goal of the channel. This channel is not sponsored by any brokerage firm, never, at least for now. So I don't have any reason as to why I want to sell you a forex stream. No, I'm not selling you a forex stream. If there is no trade opportunity, I will tell it straight up to your face. Okay, I want traders to go to the freaking bank and make withdrawals. Yeah, I want you traders to go to the freaking bank and make withdrawals. Look, I know the struggle most traders actually go through. You're constantly going to the bank with tears in your eyes to constantly deposit account upon account upon account, but never once have you made withdrawal. If I look at your trading history right now, I may likely see minus $20, minus $17, minus $30, plus 10 cents, plus $2, plus $3, or minus $50, and you've blown your account. All right. Hence the reason we built this channel, to help you struggling traders become a profitable forex trader. So if you really like yourself and you want to be that trader you always want to be, please be a part of this family. And whatever is left of your account, drop it on the comment section. Tell me this is what is left of my account. Let's see how we can help you revive the account. All right. So let's jump back into the video. So this immediate trend, the market has given us a big clue that this immediate trend wants to reverse to continue with the major trend, which is bearish. You can see we had a double top, and also we have an head and shoulder pattern, but this trend line in confluence with this neckline is what's holding this market from actually collapsing all the way to the downside. If you start coming down, this guy here will be our first target. Why? Look left, prices has and my English is acting up with me, guys. You have to my English is kind of acting up with me. That's what you get when you spend too much time in Nigeria. All right, so obviously I'm always in Nigeria, but you get the gist, right? So price has had several struggles around this level. You can see we have struggles, broke with this, push all the way to the upside. We have struggles. So best believe we are coming down. This guy is likely gonna put up a fight. You don't want to mess with this area. So once we take out this level, the next target will likely be this area. But the overall target is here, which is also 1,000 pips to the downside. So the euros is giving us 1,000 pips to the downside. The pound sterling is also giving us 1,000 pips to this downside. No matter how much you have in your account, if you align yourself with what we are doing here, you can revive your account with 1,000 pips to the downside. So now we know we are looking for a selling position to the downside. Is it time to start selling? Hell no, it's not time to start selling. Why? Because this market is currently sitting at the neckline and also this trend line, which is also here. So rules of engagement will be, we wait for a break below here. Never sell at the breaker, guys. Wait for a break below here. Wait for price to pull back. Wait for price to pull back. I don't care if you take several weeks for price to pull back here, but wait for the pullback. Wait for the bounce. You know how we trade. Wait for a break of your counter trend line. Once you have a break of a counter line, you can start selling all the way down here. So you make all this money down here. But first target will be here. Why? So this guy is here. If you take out this level, we are coming down here. So if I see price break out from this level, I'll be closing up my first position. You know how I trade now. Close out my first position, push my clear pass break even, anticipation will go over to the downside. And it's also possible, if we take out this level, we can also come here, still a little bit, pull back for a retest of fear. So I will add more position when price comes in here for a retest. Once we bounce here, I'll start selling all the way to the downside. The market won't just fall straight, like the market doesn't move, or barely the market move in a straight line. It'll fall, it'll rise, it'll fall, it'll rise, it'll fall, it'll rise, just like that. So I'll keep adding more position to my existing position until we get down here. The only time, so that's it for this guy. I'm favoring this market to the downside to the tune of 70%. I'm also favoring this market to the upside to the tune of 30%. I will always keep that 30%. Why? Because anything can happen in the forex market. All right, I just told you earlier on, sharp patterns, regardless of the time frame they occur, they can be invalidated. It's possible we can form a bullish, you can have a bullish candlestick formation here and shoot all the way to the upside, because this guy, let me zoom out properly so you get to see this trend. So this trend, this is an immediate bullish trend, right? It has not completely flipped from being bullish to now being bearish. It has given us a sign it wants to, but it has not completely. And this is the third touch of our trend line. We can form a base here, and price can start pushing all the way to the upside. And if that happens, if price comes back here and I see a break of this area, it means the whole sell setup has been validated. We can start looking for buying position to the upside. But don't worry, guys. Once you break above here, that should happen. No, if you break above here, don't worry, guys. Don't beat yourself. Don't cry. I'll come out here, reanalyze the market. We'll see how we can actually start looking for buying position. But it's not as to why that should happen. I'm 70% sure this market is likely going to speed to the downside. All right, so that's it for this guy. Wait for the breakout, a retest of here. Go to the 4 hours time frame, please, guys. I don't take my trades on the weekly and the daily time frame. I execute my trades on the 4 hours time frame. All right. So regardless of what kind of trader you are, please maybe use 15 minutes time frame. But I prefer the 4 hours because it gives me a more concrete bias than the 15 minutes, the 1 minute. Best believe a proper breakout on the 4 hours time frame is more concrete than what the 15-minute time frame will be doing. All right, so that's it for GBPUSD. Let's look at the S&P 500. Then we call it a day. The S&P 500 will be anticipating a reversal to the downside. Last episode I said, look, we should expect a reversal to the downside. If you look at the chart, the market is due for a reversal. You have to understand the market doesn't move in a straight fashion. It pushes up, it retraces, pushes up, it traces, it pushes up. It needs to at least correct itself somewhere around there or this trend line before actually going on to the upside, right? Why does this occur, right? You have to understand, for every milestone achieved, investors will close position as profit, hence the market collapsing all the way to the downside before actually continuing with the major trend. And if you look at previous price action, you notice whenever the market wants to reverse, it always leaves a clue. Market doesn't just reverse, it always gives you a clue. So let's look at previous price action. Notice how we came into this level. This was the all-time achievement at the time. We formed a double top. This was the first top, this was the second top, and this was the neckline of the double top. It was a simple breakout, a retest, a break of a counter trend line. It was a sweet stuff for me. Once I saw this breakout from the 4 hours time, I jumped in and I made all of this money. It was one of my best trades that I took for the S&P 500. So the market will always give you a clue when it wants to reverse to the downside. If I go to previous price action, you will see more clues when the market wants to reverse. Also here, we also form a double top. Here we also had an head and shoulder pattern before we reverse, before actually pushing all the way to the upside. Here we had a triple top, we reverse all the way to the downside. Why am I doing all of this? I'm trying to build a case as to why the market wants to reverse to the downside, and also teaching you guys how to know when a market wants to reverse. And also, you need to know why a market is reversing, so you don't sleep too long on a short sell or a short position, right? What that means is most persons, when they see a head and shoulder pattern, they'll just say change of trend, and they start selling, thinking the trend will not change from being entirely flipping from being one particular trend on something else. You need to know the reason as to why the market wants to change. Is it as a result of profit taking? This reversal you see here was as a result of profit taking, hence the double top telling, look, the market will reverse to the nearest support before continuing with the major trend. So this, what is happening right here now, is not something you want to sleep too long on the trend. This is a left shoulder, head, right shoulder. This is a reversal sharp pattern to the downside. But this reversal is as a result of profit taken by investors, right? I hope you get the gist. For every milestone achieved, investors will close position as profit, hence the reason the market will reverse to the downside before actually continuing with the trend. So left shoulder, head, right shoulder is telling us, look, we want to reverse to the downside. Head and shoulder pattern are bearish reversal chart pattern, right? They can flip a trend from being bearish to being bullish, but know that we're not sleeping too long on this trend, because why? This as a result of profit taking. So what will be the rules of engagement? I would love to see price come out here, take out the neckline, a retest of here. We can start selling all the way down here. Once price comes in here, sorry guys, you can actually hear range falling. My PC is very close to the window. So if you're hearing rain dropping, if you're hearing the sound of rain, I'm very sorry. Uh, yeah, I'm very sorry, right? Quickly, let me round up the video so we don't get distracted and the noise doesn't spoil the whole video. So wait for a breakout here, a retest of here, a bounce. From here, we can start selling all the way to the downside. Once we come in here, I will close out my profit, my trade entirely as profit. Why? Because we can come here and shoot all the way to the upside. And if I bring up my Fibonacci from swing low, to swing high, you realize this area came in confluence with the 50% Fibonacci. So you can actually spill maybe a little bit into this area or do a touch of this trend line before actually blowing all the way to the upside. Okay, so once price comes in here, I'll close out my first trade entirely as profit, or yeah, I'll close my first entirely as profit anticipation. We can start reversing all the way to the downside. So finger crossed, we will closely watching this for the upcoming week. Guys, I have to cut the video short. Thank you for staying to the end of this video. Now, before I close this episode, I want to say that I'm not going to trade all of this pair at a go. Alright, even if all the criteria is met for my entry, I'm going to pick out the best 1 or 2 pairs and I will trade it. It's not okay to expose all of your trading accounts at a go. Regardless of whatever happened, you have to put something, you have to have certain measures in place. Regardless of what happened, I'm going to pick 1 or 2 pairs and trade. Yeah, I'm going to pick one of the best 1 or 2 pairs and trade. I will not trade all of this. I have to state this. The reason I'm doing all of this analysis is to help you identify trade opportunity. Maybe you trade one pair, you don't trade the other pair. So if you trade most people trade AUD/USD, they don't trade the euros. Most people trade NZD/USD, they don't trade the US30. So the best pair you love trading, just pick it and follow what we just talked about here. And I see no reason as to why you shouldn't make profit. I'm sorry on today's episode I didn't talk about the AUD/USD and the NZD/USD because of the rain and the noise and the thunder that are blowing outside. I would have loved to talk about this pair, but good thing is after the rain drop, I'll also make a special video on those pairs, so you also get to watch those videos and also become a profitable Forex trader. All right, I'll catch you guys in my other screen. Peace and love. Take it easy.